Today's guest is Matt Ober, managing partner at Social Leverage, an early stage venture firm that was early in companies like Robinhood, eToro, Alpaca, and Customer. Before doing VC, he was a chief data scientist at Third Point and founding member of World Quant Ventures, in an environment where every decision is measured daily and mistakes are immediately exposed. But what makes Matt's journey interesting isn't the wins, it's the transition. He's lived in two extreme worlds: the public markets, where feedback is instant and unforgiving, and the private markets, where you make decisions in uncertainty and wait years to learn if you're right. Along the way, he's learned where data helps, where it lies to you, and why most smart people struggle when they move from being right on paper to being responsible in life. Matt, welcome to the podcast.
Thank you. Excited to be here.
So, before we jump into it, what's been your biggest lesson learned in 2025?
Biggest lesson learned in 2025. I think it's trust your instincts, right? I think I have learned from investing in people, which is where early stage investing is, which is it's all about the people that if you have a sense that it's not the right thing, quickly move on. Don't second guess yourself. So trust those initial instincts. I think that's always been the best thing for me.
Yeah, I think I've also learned that through the years as well, to trust your gut, because not because it's like kind of woo woo out there, but more so your mind has got the repetitions of what's right, what's not right, and sort of taken that feedback loop and sort of put that in the back of your mind. So yeah, your gut is refined through the years.
I agree with that. Trust, but verify. I mean, obviously trust the gut and then go into, going a
Yeah,
little bit deeper. But if it doesn't feel right at first, it's probably best to move on.
exactly. So Matt, just walk us through your background briefly. How did you get here today?
Yeah. So I grew up in California, went to a state school called Chico State University. After school, I would join Bloomberg. That was in the early days of Bloomberg where everybody started out answering the phones. So that 800 number, it could be a Chico State grad or Harvard or Yale. We're all sitting in a room just answering the 800 number. Ended up learning analytics, equity and derivatives, all the public market stuff, like learning on a Bloomberg terminal. Didn't realize at the time like how powerful that piece of software is in financial markets, but it was like a great training ground. Then joined a quantitative hedge fund. In a very weird way, I answered a Craigslist ad, which I thought was a scam, but ended up becoming a company called World Quant, which is part of Millennium Partners. At the time, it was this, like 70, 80 PhDs doing all systematic investing, and they wanted me to run data strategy. And the founder, Igor's thesis was you consume more data than anybody else in the world, you can manage more money. And so I went on a 6-year sprint flying around the world, spending hundreds of millions of dollars buying data. And we ended up having 600 researchers, managing 30 billion plus, doing all systematic investing. Spending all that money, we ended up getting to launch a venture firm within the fund to invest in a lot of these companies. So great experience, like really like a technology firm, but like obviously we were a hedge fund. And then through that, I met a recruiter that ended up bringing me to Third Point, which is Dan Loeb's hedge fund. So very activist, but equity credit, structured credit. At the time, I think it was 20 billion in size. And he wanted to leverage data and technology more in their investment process. Small team of like 20 investors for how much money they had. And so I was hired as chief data scientist. And that really meant like, let's use all this data and technology that's out there in the world to be smarter about how we make decisions, whether that's, going activist on Campbell's Soup or Nestle, or it's, just making other investments. And so I ran risk data and analytics there. Great ton of experience and stories from doing that. And I had met Howard Lindzon in the social leverage team going back to World Quant. I was actually there. Howard had started StockTwits, which is like the Twitter for finance. And
Yeah.
I was the first data API client. I had cold called Howard at WorldQuant. We used it as part of our strategy and, ended up becoming friends, followed along them in investments, became an LP. And then 5 years after working at Third Point for a while, ended up joining the team as the fourth partner at Social Leverage. And wildly successful they've been over the first, funds, investing in Robinhood at the very beginning, eToro, Alpaca, Customer with a K, Manscaped, like all these different companies. And so, fast forward today, we just closed our fifth fund. We also have a fund to fund that we launched, and 7 strong on the team in San Diego and Arizona, and continue to invest in early stage, mainly fintech and now you call it vertical AI companies.
That's fascinating. What's I just want to double click on the data portion when you were talking about back you were buying data because I've always heard that back in the day like hey this is the data game, it's all about like how much data you can own, right? But I don't know much about the market about it. So like do people monetize it or like what's that game like?
Yeah, in the early days of World Quant, this was before it was called alternative data. It was, the thesis was like you can buy data from FactSet and Bloomberg and S&P, like traditional fundamentals and income statements, news feeds. But then there was like everything else. Like how do you buy satellite image data and credit card data? How do you think about like retail sentiment? Anything that happens in the world, if there's a company collecting data or information on it, it's obviously more interesting for everybody to be able to use that for their investing strategy. So we were early in that. A lot of it was like cold outreach to companies and it was, becoming sometimes their first client. And, from the vendor seller perspective, they were extremely excited to, make money off of selling their data assets.
Hmm. And now I would assume it's more relevant than ever with AI, right? I mean, are people buying data to train their own algorithms?
Yeah. I mean, I think we've moved past the world of like calling it alt data or alternative data. And I think data was the new oil back in like 2008. And I think now the more you get into AI, the more you realize every LLM and every company needs more and more data. I think costs of data will eventually essentially have to go down, but I think we all want to consume 1,000 times more information. And so I think that the data owners, are in a great spot, assuming that they have a moat on what they built. I do also think, as an investor in early stage companies, there's a great opportunity to go after some of the incumbents that have these, multi-billion-dollar data assets.
Hmm. Yeah, somewhat related was so I used to work at Tesla, and back in the day, like they started the self-driving system a long time ago, and like sort of feeding into this sort of hive mind of like data, right? And now they have like how many billions of miles driven of informational data versus like a new entrant, like they would need to start from scratch or like license the data or something, right?
Right. Yeah, the value of that for like we call it like world models and world data, like you're not going to be able to compete with Tesla because, the smartest companies in the world don't sell their data, right? Google doesn't sell their data. Tesla's not going out there and selling their data. Facebook sells like derivative access, but they're not like there's no Facebook data feed that you can buy, right? Because the smartest companies in the world know that that's their moat, right? And so I think that, you know, Elon has a extremely interesting leg up on everybody.
Hmm, that's interesting. And just one more thing on the data space, like, is there an opportunity to arbitrage, like maybe certain kind of legacy spaces, like they haven't really thought much about the data. Let's say, for me, like I'm in the mobile home park space, like maybe some provider there, you can do that and then sort of patch that up to some software down the line.
Yeah, I think so. Like, when I was on the third point side, we would think about our investments, right? We invested in the storage industry. There's like a couple companies that storage unit owners use for data, right? To understand like competitors' pricing around each unit for different zip codes. If you think about that, if you can buy that entire feed, there's public companies that are storage unit providers. I can understand, how much they're selling their units for and their, pass through with credit card data. I can do a lot of analysis to quickly understand before the quarter, are they winning or are they losing? So if you think that for the RV parks, whether you're doing public investments or private, like there's a lot of probably interest from investors if they can buy the RV park data.
That's interesting. Just shifting gears back to you, Matt. Your story. I mean, it's not the sort of typical kind of VC feeder funnel, right? Like you didn't go to like an Ivy school. You went to Chico State. You worked at Bloomberg. You answered a Craigslist ad. That's pretty interesting. So was this kind of your plan all along, or were there changes along the way?
I mean, I think Chico State ended up being the school that I went to. It's been great. I actually sit on the board of Chico State now. So like, came full circle. I think Bloomberg at the time was, a job that I got. It was an amazing place to get a job. And like, so there wasn't a lot of like hiring happening on Wall Street at the time. I also don't think that Goldman is going to the Chico State job fair. So It worked. I think once I got to Bloomberg and was on the other side of the terminal, for anybody that's, knows Bloomberg, you have that help button and you can ask a question. And being on the other side of those questions, you start to realize like, all these really successful people on Wall Street. I think I kind of got to the point where it was like I could be on the other side. Like I don't think that there's anything different between the two of us except for the seat that we have. And so I think that was my driving force to kind of jump into trying to get a hedge fund job. And don't get me wrong, it wasn't easy. I think it took me 2 years and a Craigslist posting to break in. And then like a lot of things, you have to find a way to break in and then you got to continue to climb and fight your way to where you want to get.
So how did you break in?
I think 2 years of nonstop applying and networking and realizing living in SF wasn't going to be the right place to live and moving from San Francisco to New York and then from New York continuing to like, not take no for an answer. And then obviously once I got an interview in front of the right type of company, worked out at WorldCoin.
That's great. And so for you, I mean, I feel like the sort of common thread has always been data, right? Like data to you, like you sort of saw the value early on and you sort of honed that in, and that's like kind of your unfair advantage, so to speak.
Yeah, I mean, I think I probably got the most knowledge and thought and insight about the opportunity when working within WorldQuant and just seeing how we thought about it. And then obviously taking that experience to the third point and then starting to think about that as like, well, there's all these companies. Like if I was investing privately, what would that look like? Not just data, but like capital markets, fintech, financial services in general. And then obviously, the software in and around data. I think it's hard as an early stage investor to find the next data company per se. We have some exciting ones in our portfolio now, but I wouldn't say you look at the social leverage portfolio and say like, oh, well, there's like 24 companies that are data companies, right? They take a long time to build. The visions are hard. The largest data companies in the world have been like serial acquisitions as well.
That's interesting. Yeah, I mean, I feel like data is like this big black box, right? Like you're just like hoarding data, and then you sort of like patch on stuff through like acquisitions, as you say, and then eventually like it reaches a critical mass where it becomes like useful to someone, and then you sort of transact and do it that way, right?
Yeah, it's either you figure out how to productize it or bake it into different workflows, or you have a unique mode of collecting it. I think where AI is now, there's a unique opportunity to be building some of these data companies. If you look at them in the public markets, they have 10, 20,000 people doing stuff that we can now do with like 50 people. So I think that's the opportunity, revenue per head count and like building similar assets and going after them.
Yeah, absolutely. And also the sort of offshoring trend, right? I mean, a lot more roles like through COVID, like you can do a lot more remotely now, and you can like offshore a lot of things and save headcount or like save expenses that way too. So as far as data goes, I mean, you mentioned that data mostly gives people confidence, but sometimes false confidence. So what do people get wrong about data?
I mean, listen, I think from the public markets perspective, like, and I always think about this from data vendors we used to buy data from, it's like, how accurate has it actually been? And like, is the data point in time that you're buying, like, are you getting like what, like, if they're giving you an historical dump of information, like, is that exactly how they collected it at that time historically? And there's a timestamp for that because a lot of people, do the work to clean it up and the model makes it more accurate. But then, you get a false sense of security when you do a paper back test on like, oh, if I would have owned this data, then I would have done this trade or that investment. So I think that's a lot of the work you do in the investment space is like, how much trustworthy is this data set and how accurate it is. And sometimes you buy stuff that is inaccurate because other people on the street are using it and you want to like know why maybe the stock moves based off of false information. But, it's a lot of games being played.
Yeah. And how do you like diligence it or like scrub the data to make it better? How do you determine what's a good like on your time to like refine?
I think it depends on the firm and the strategy, the size of your team, the assets you have. I think, you know, getting the trust of the vendor is like, trusting any person. Like, can they answer the questions that you're asking? Do they have like, proof? Like, do you trust them as a person? Are you the first client? Do they have lots of clients as a well-known brand? Have they hired people that are trustworthy from the industry to join them? And then, you have to do the analysis on everything. I think cleaning the data and all that stuff is another level of like work that like only some firms are going to spend time doing.
Yeah, and I could definitely relate to that. Just being in the mobile home park space, because like the information here is like so fragmented. It's not like like multifamily or something like that. It's like very easy to get the data through aggregators like CoStar or something. Like you have to like manually scrape it together, or like buy a list, or like research the county, and then like how do you track the actual people down? Because there's a lot of individual ownership, and like people die, like things change hands and stuff. So it's like when is it the right time to like refine it and like put budget towards that? You're doing outreach, and it's like you're hitting like wrong number after wrong number. It's like, all right, that's a waste of time.
Right.
Yeah,
Well, I mean,
definitely
I
feel
guess
that.
that's the exciting part about AI now with like not only web scraping and data collection, but like automating those outbound outreaches to see if people are actually there. Like there's a lot of
Yeah.
companies trying to break into that.
Mm. How would you do it? I mean, if you were in my shoes.
I mean, I think I would go on a web scraping, focus data build out, right? Which also would be like doing like checks on if like the data has changed. And then I would do some automated outreach with like voice AI on calling to see if the phone numbers actually work. Do people answer? Some of the voice AI now is so powerful, you actually think it's a real person. They could be booking you actual meetings once they qualify for things. We have a investment in a company called Ribbon AI, which is on the interviewing side, but like people are doing their phone screens with voice AIs now.
Wow, that's
Yeah.
fascinating. Yeah, very cool. So speaking of that too, I mean, moving to um, kind of your career. So you were at the hedge fund, and you sort of transitioned to VC. Was there a particular reason for you wanting to do that?
We always did venture investing with inside the hedge fund. I think for me, a hedge fund, it's a 1 year sprint and you start over. It's nice because you quickly know like up or down, win or lose. Are you making any money this year? Flip side is you can't really think for the long term, or nobody really has a long term vision. And I think like I liked the idea of the longer term horizon. And also, you could say more risk, but more upside, obviously, with early stage companies. And so, kind of control your own destiny a little bit more. The day to day is a little bit different. Don't live and die by a tweet from Trump or a escalation of war or whatever it is. So a little bit more of a different phase of investing.
Yeah, I feel like for hedge funds, it's super like high frequency, right? And like you need the best data instantaneously, and then like your position could blow up any point in time. Like you go to lunch, you come back, you're like, whoa, something changed.
Right. Yeah. Then I mean we're seed stage investors. It's a 10-year fund. We have a long term vision. Like the stress day to day. Like if you take a step back, sometimes you're like, this might change tomorrow. Like company raises today, they might not raise again for 18 to 24 months. There's a lot of things that can happen in between that. So, um,
Hmm.
you know, your public
Yeah,
market investors, your companies aren't going out of business, right? Stock may
right,
go down, but most of them aren't going to zero if you're investing in larger companies. In early stage
right.
venture, a lot of companies aren't going to make it.
Yeah, so let's talk about social leverage. So how do you guys look at these opportunities? Like how do you know if, let's say, a founder is worth backing, or a platform? Like is it more so dependent on the founder or the platform that they're making?
I mean, I think 99% of our deals are coming inbound. So like there's a warm connection somehow. I would say we got to believe in the idea and how big the opportunity is and like the vision, and the numbers all have to make sense on like, who owns what, how much are we putting in. But then it comes down to the people, right? Because they're probably going to pivot, or there's going to be a hardship, or the product's going to change, or something's going to happen. So we want to get to know the people, what makes them tick, what experience do they have that makes this like something that they're going to be successful at. Do we want to talk to them on a daily, weekly basis? Can they handle adversity? What adversity have they been through in their life that they've, are going to lean on to handle the ups and downs of being a founder? And then, can we be helpful? We're not the type to invest in something and, hope and pray for 10 years. Like if I can't, be helpful when they call on a regular basis, sales, recruiting, being a user of the product, then it's probably not the right fit for us.
Yeah, that's interesting. So, as far as the founder itself, let's say, what are your go-to questions like to try to evaluate if they're like good people or not? I mean, obviously there's like, the checkbox stuff, but like, let's say you're hanging out with an investor, or like a founder, and what are kind of the questions that tell you a lot?
I want to know like what are they in this for? Like why are they building this? What like is going to make that like somebody offers them 50 million in a year? Are they going to take it? Are they trying to build something bigger? What drives them? What keeps them up at night? What are they worried about right now? Why are they building this and taking this risk? Also try to understand like who they are. Are they married? Do they have kids? Like what do they think about from a priorities perspective? How do they balance things? All those type of things to just suss out like, do we think that we could be helpful and work together? Right? Like if I'm gonna fly to their board meeting, am I excited to see them and, you know, go out to dinner afterwards? Or is it just not somebody that I can see myself working with on a regular basis?
Mm. That is interesting. So a lot of it is kind of just like, do you like the person, right? Like fundamentally, not so much like just like the company. Hey, like this is what everyone's trying to get into, so let's try to squeeze into that.
Yeah, I think we are non-consensus where we're happy to do the investment on our own. We're happy to do things with others, but we need to own a certain amount, and like we're going to be pretty hands-on, like with the board seat or a board observer. It's going to come down to the people, right? Because at the end of the day, we have companies that are working on one thing, and they start to see feedback from clients, and they maybe it's not a complete pivot, but they pivot a bit, and so you know, do you want to be there working hand in hand with them?
Mm,
Do
that
you
makes
like the
sense.
idea? Also, obviously, that's important.
Yeah. Do you guys have a way to evaluate if an idea is good? Is it just like calculating TAM and like, working backwards from there?
We're not gonna run I mean, it's helpful, but I think, like, probably the best ideas don't have, like, a big market yet or market doesn't exist. We leverage our social network and our LPs and everything, like, if it's in wealth management and they're changing wealth management technology, like, I have dozens of LPs that are wealth managers, right? If it's in financial services, if it's brokerage, like, we were first investors in Robinhood. Howard started StockTwits and we sit on the board there still. So like we have a lot of like people in our network we can share things with to get feedback. And so I think for us, like we're going to put in a good amount of work before we like jump into something. We're investors in a company that does compliance for investors, right? Most investors, if they're SEC registered, have to save their emails and their text messages and all their communication. We invested in a company called Archive Intel. We were users of the product. And like we have probably dozens and dozens of people we know that also need something like this or have a using competitor. And so we quickly make 2, 3 dozen intros and half of them convert to sales. Like that's obviously a good sign.
Hmm. Yeah. So what's interesting about VC is that it's very broad, right? Like the companies that you guys invest in, it's not all in like one particular niche. So I mean, do you like how do you diligence that? Like if you're like looking at a brand new company, like how do you get good at it? How do you understand sort of like the nature of the beast?
I think we stay in our focus, at least for me, like I do fintech and like data. It's like things I've been doing my whole career. I don't really do insurance. I just don't know the insurance industry well enough, or like I'm not deep in the payments infrastructure space. So like there are nuances where like maybe we won't get involved. Um, you know, Howard's done a lot of financial services on the consumer side and media. My partner Gary started 4 companies and sold this last one to Salesforce, and it's always been in like enterprise SaaS, go to market, customer service. So like he understands vertical SaaS and enterprise SaaS really well. Obviously, everything has a little bit of a different nuance for different verticals, construction versus legal, but like there's a similar playbook of like understanding what's the right team and right product. And like we obviously spend a good amount of time talking to our network.
Hmm. Got you. So tell me more about the team. Like how big is it? Like how do you guys typically make decisions?
We're 4 partners started by Howard and Tom, and then Gary and I are the other 2 partners. We're consensus, so there's usually one partner that leads the deal and finds the investment and like really is like deepest on it. But we'll all meet the founders, a lot of times meet the person in like person before we actually make the investment. And then, we're a consensus that we all have to agree before we do something. And then once we're invested, they get access to all of us. We have 3 additional on the team. So, we're pretty hands on and tell the founders the most successful founders are going to leverage all of us and build relationships with all of us. But, one of us will be there on a regular basis. And then eventually we'll roll off of a board or so forth once they get, Series B and beyond.
Is there a way that you guys like figure out tiebreakers? Like if two are in, two are out, like how do you figure that out?
I think we get to the point like if not everybody's on board, we move on. Right? It's like a
And
consensus thing. Like obviously the
yeah,
lead is going to pound the table a little bit if they're truly convicted. But I think like if two of us are really against it, like probably means like we should trust each other.
that's fair. That's fair. So as far as like your involvement with the companies that you invest in, how do you exactly help them out? Like what happens, after you guys cut the check?
I mean, it could be everything from thinking through product sales, go to market strategy, whether that's, cold email and conferences to leveraging our networks to, thinking about the next investment round and what are the KPIs and finances need to look like to get there. I think it kind of can be across the board. It depends on what they need and kind of where they at are in their journey, right? Some are, seed stage could be as early as a little revenue or like they might be approaching 1 million already.
Hmm, got you. And how much of the help comes from like, or should I say, as far as the resources go, how much do you guys kind of build out your internal resources to help your portfolio companies versus like what is just happenstance? Like, oh, hey, Jim over there's got some capacity. Oh, hey, like go help this guy out.
I think like we always have time for the founders, right? Our job is to work with them and find new investments. We're only raising money at certain time periods. Otherwise, we're like, fully focused on the task at hand. We have our own tools and everything internally, but that's more for our own operations, right? Like our own investment memos and quarterly updates and all that stuff. But like a lot of that we've kind of built on our own or using different softwares. We have, three others on the team that kind of help in and around that. But otherwise, not uncommon for me to, spend an hour or two with one of our companies every day diving into something.
Mm, got you. Now, so you guys are an early stage firm. Like how early are you? Are you like pre-revenue or
We like to see a product, typically a little bit of revenue. It doesn't have to be crazy, but it's nice to be able to like talk to a few users and understand why they like it. See some like go to market motion to see that there is actual like product market fit of some sort. We're usually the first investor. Maybe sometimes I've raised a little bit like friends and family, but usually the first institutional investor.
so I take it that you've probably spoken with a wide variety of founders, right? Everyone from like, oh my god, like that guy is like the next Sam Altman versus like, who's this guy? Like, what mistakes do most founders make? Like, what commonalities do you see that are like making a strong founder?
I mean, I think mistakes is like not knowing who you're talking to before you get on the phone, like understanding like what their focus is. I think a lot of times like founders, like if it's not a fit, will kind of argue or try and like overpitch. But like there's also you got to understand like the fun math. Like we need 100x returns on our money. So like maybe this doesn't maybe it's not a venture investor that you need, right? Or like just because we invest in financial services doesn't mean we might like the area you're in. Or we typically only do US and Canada based investments. So like focus on Latin America, like just doesn't it's not gonna make sense. I think the founders that are good are like very well prepared. They run a good process. Like they have their deck. They're ready with like a follow up with a data room if we're interested in moving quickly. They have thought about how much they want to raise exactly and have a reason for it. They're raising enough, but not too much that it's crazy. They've kind of crossed their T's and dotted their I's before they've gotten on the phone call.
So how does like a founder due diligence on like the company that they're talking to? Like, is this information like all like on your guys' website where like, which stage and like, what kind of people you like to work with?
I think a good amount's on our website. I think like you can search enough online to see the type of companies we invest in and there's enough like tools out there for founders and they can talk to other founders, right? The best way to get in front of an investor is a warm intro. I think cold emails are hard for anybody.
Yeah. I never respond to cold emails, cold DMs. I just mark it read and toss it away.
Yeah.
I
I mean, I
gotcha.
don't say no to it. I mean, we look at them, but I think it's a lot
Yeah,
more difficult.
for sure, for sure. Because like there's a million and one things nowadays. So something I'm curious about, man, is so your guys' investors, like your LPs, like how do you find them? Like where do they come from? How do they find you?
Yeah, I think a lot of them have been investing with us since the very beginning. We do a lot with the wealth management community. So wealth managers, we meet at different conferences. We have a lot of people that go to their wealth managers and say they'd like to work with us. Family offices, I think, is there's family office events, and you meet one family office, they introduce you to others, and then like any LP raising, it probably takes 2 years to build a relationship with somebody that's writing a larger check. We still have a lot of ultra high net worth founders, people that you know, write the minimum check that just want to be a part of it. They want to diversify, but also like are excited about the type of companies we invest in and are helpful. But like then there's the more, we write a much larger check and it's a bigger process.
Gotcha. So what's typically like, I don't know, like what's your minimum bite size?
Our minimum investors are 250,000 and we have investors are 20 million plus.
And that's like pretty standard for VC, right?
I mean, I think minimums could be a lot higher. We've had higher minimums on other funds. We have lower, but I think it really just depends on it depends on like the stage of the fund too. Like we're seed stage, so we do early stage, and like we've been around. Some early stage funds that are newer might have a 50,000 or $100,000 minimum. Growth size fund of like billions of dollars might take only a minimum of a $10 million check.
Yeah, that makes sense. Okay, now I want to just ask you about like as far as your journey with social leverage, like when you joined them, like how big were they, and like kind of what changes did you put about for the team? How'd you help them grow?
Yeah, when I joined, there's three partners, so now I'm the fourth. We added three additional, like so we have a venture partner, someone on like the finance and operations compliance side, and then a associate to help us on the investment side. I think we've done a
Okay.
good job with the associate, like automating a lot of the investor reporting and updates and analysis, and like we're leveraging the same AI tools that are out there that everybody's talking about. And then I think just like we've always been good on fintech, especially on the retail side. I have a more institutional background, right? So more B2B or compliance. So just think like we're even more well rounded than before.
Hmm, got you. So that's interesting. I mean, as far as like the automation side, like what do you guys typically automate? Is it like just initial deal screening? Is it kind of like parsing pitch decks to see if it makes sense?
For us, it's more about an analyzing, like building our own investment memos, our own quarterly reporting, our own like monthly updates, those type of processes, data crunching. We'll run through our data rooms and everything. That's probably more of how we use it. Summarizing large research papers. It's less on like the inbound. I'm going to open a deck and look at it or see what the idea is. It's not like I have 1,000 decks a day that I can't get through. We still have a lot, but we also have, a team. And I think like it's coming from a trusted source. It's probably going to get looked at much quicker.
Mm, got you. And as far as like your involvement, man, just like with the rest of the team, like what is that like? Are you like leading your own team? Um are you sort of like growing out certain areas, and how's that kind of like involvement?
Yeah, I mean, we all manage the companies that we're invested in terms of being like on the board and everything. And have similar different, pipelines of new things we're looking at, but we work and collaborate on everything, right? We're not making investment decisions or anything in a silo. Have twice a week meetings as partners. We have an office here in San Diego and Arizona, so we're seeing each other on a weekly basis. We all travel, but we also travel a lot in overlap. So I would say I'm on the phone or in person with our team probably on a daily basis.
Got you. Okay. And I mean, I take it for you, like no 2 days are alike. I mean, you're at that level, right? So, I mean, what areas of like what you do you like the most?
I mean, listen, I love meeting new founders, building innovative things. I think I still enjoy the in person stuff, right? So, like, I like going to the conference and like meeting people. Like, obviously, conferences are hard, and maybe I'm a little bit pickier now on what I show up to. But like, you know, in person, the energy, getting to meet with founders, even the ones that we're invested in, and thinking through the problems and the challenges, you know, brings a lot of excitement.
Yeah, I agree. Like in person is always good, especially like conferences, but then you're like out of pocket for some days and you're back. You have to like reach out to people that you spoke to and then also catch up to the emails that you missed and stuff.
It's a lot, yeah. You gotta let some things go, I guess, over time is what I've learned.
Yeah, for sure. How do you like manage your time? Do you have like a system? Do you have like principles that you work with?
I try and block hours, twice a week where I don't have things. So I have more time to just like be a little bit more free form. I think I've gotten better at saying no to meetings now in the last like year or so. I use Superhuman for my email to make it a little bit easier and quicker. So I try and use different tools. I'm pretty steady on my like schedule in terms of like what time I work in the morning and stop and then back on after the kids go to bed. So
Mm,
I think I've gotten good at that. I try and travel in the beginning of weeks rather than the end of weeks. I think just little things that just like give me routine.
yeah, I gotcha. Yeah, I think a lot of it is sort of knowing how you work as a person. Like for me, like my best work comes in the morning, so like block out morning as much as you can, for the working on the business kind of stuff versus in
Yeah,
the
like I know
business.
I'm better if I work out in the morning and do exercise in the morning. So I'm just ready to go and off my plate for the rest of the day.
Yeah. So what's kind of your routine? Like how do you sort of optimize your own like juggling versus like work, working out, like family?
I think less of the job as a job and more of like, it's it takes so much of my time and my headspace is there, but like I'm also like, enjoying it as well. And so, family time in the morning once the kids get up, when I'm home, you're focused on those things. When they're asleep, then I have time back to myself. I think goes in bursts also. There could be days where you're
Mm,
very heavily work and then you're traveling and everything, and then you come back and kind of reset and put that on the back burner. I think venture is a lot different in that way in terms of like we're managing our own
mm.
priorities and what needs to get done now and what's later versus like I don't have to be up in front of the screen right at a specific time because the market's open.
Yeah, that's true. It's not like 9:30 on the dot, you're like ready to go. Yeah, yeah, I think being like an owner kind of just changes your mentality on things. Yeah, I mean, like I don't view this as work either. I think it's just fun. Like you're learning new things, you're talking to people, like checking out new opportunities, like leveling up yourself as well. So I think that's always interesting. So as far as like your kids, I'm just curious. Like, are they like how old are they?
Young ones from 1 to 5.5. So I've got three little ones.
So how did you manage the workload? I mean, like when you have kids, I mean it's like a new part time job, right?
I got a great wife, and she keeps us on a good schedule and organized. Listen, I think like with everything, like you make sacrifices for things. I'm not going to go to not going to a conference a day early and like getting in and enjoying myself. Maybe I'm taking a red eye more often than I'd want to, but I think like yeah, with sacrifices comes the excitement of having a family. Um,
Yeah.
it's all good.
Yeah, and I'm always curious, like talking to people, like how they manage their kids, their family, and stuff. Because, like, a good one, it just like it gives you all the energy and the motivation and all the system that you need. Especially like having a good partner, right? Like having a good life partner. That's something I consistently hear amongst like super successful people, like Warren Buffett. He's like choosing your partner is like one of the most important things you could do.
Communication. It's the most important thing.
Yeah. How do you communicate? Is there like I don't know, like frameworks or I don't know things that you guys do?
No, I think it's just constant communication, over communicating, being honest.
Yeah. Yeah, I do think that's one thing that's been helpful for me and my wife, kind of dedicating that time to check in with each other because like, we both have our own lives and like we're both running around. Yeah, in the evening, like you're just kind of on your phone, kind of like decompressing a little bit, but like actually being there and like saying what's on your mind,
Getting
how
rid
are
of the
things.
phone. Yeah.
Yeah,
Putting the phone
exactly.
down. It's always the most important.
Yeah, yeah. We have like an intentional day. It's like once a month, no phone for an afternoon. Like let's just be with each other. So that's been working well so far.
Awesome.
Yeah. So last thing on social leverage, like what's been your best decision? What's been your worst decision?
Best decision, I mean, I think just joining social leverage. Like I have no regrets. I think it's exactly what I wanted, exactly what I was looking for. Great team here and like we enjoy what we do every day. Biggest regrets, maybe joining or taking the leap of faith earlier in life and not waiting as long. Maybe before COVID, but nobody could have predicted that,
Yeah.
right? It would have been great to make
Yeah.
that flip before COVID and not spend 2 years in the
Mm,
city during COVID. Listen, I think you regret some investments here and there, like bad ones or even ones that you miss, right? Like you see something and you didn't do it, but like all of those are learning opportunities, right? Like there's a million opportunities out there. So like I don't really have regrets. I think it's more of like reassessing why you made that decision. And most of the time the decision was probably right for, I look at it as like we didn't do that because we didn't like the person or like the valuation was too expensive. And like just because we missed that one, we avoided those 10 others that didn't work out. So you got to kind of look at the risk reward on everything.
Yeah. And speaking of decisions, what's the decision that took you the longest to make and why?
I don't know. That's a good question. I think the longest decision for me to make, like, I don't think like we take long on making investment decisions because, like, if we're not convicted at that point, then like it probably wasn't a good idea. So I couldn't tell you like what was the longest decision.
Okay. Or what was maybe something that, early career Matt did that you would change, moving back?
I would have moved to New York earlier. I think like if
Yeah.
you want to work in the investment industry, like New York, London, maybe Hong Kong, but like San Francisco is a retired Wall Street. Like anybody that's in San Francisco will tell you, like you can't build a really successful investment career there. So I would have left earlier for New York. Everybody says it's expensive, this, that, and the other thing. You can live in New York and be poor, and like you can live in a small room, and like you don't need all the glitz and glamour.
Yeah, yeah. I feel like people get influenced too much, like keeping up with the Joneses and stuff, like having a decent spot, like just suck
Doesn't
it up.
matter.
Like, yeah, if your why is worth it, you'll sacrifice to make it happen. Well, no, this is all great, man, and I appreciate you sharing your insights. It's been fascinating to learn. What kind of people are you looking to connect with the most, and how can people reach out to you?
Yeah, always love meeting early stage and founders. Fintech and vertical SaaS is where we focus our time. I always look at data companies as well, so that's helpful. On the investor side, always happy to talk about what we're doing with new LPs, and you can reach us at socialleverage.com. I'm active on LinkedIn. Those are probably two of the easiest places to get to us, and then we can hop on a Zoom or email or meet in person.
Excellent. And if you could give one final message to the listeners, what would that be?
Enjoy what you're doing. Life's too short to be working on something that you don't enjoy every day. I think once you get to the point of finding what you actually like, just go for that. Like make money in a lot of different ways.
Excellent. Well, thank you for your wisdom, Matt. Thanks for coming on.
I appreciate it.